Hello traders, welcome to another one of my videos. In this video I'm going to be breaking down CADJPY, or the Canadian dollar versus the Japanese yen. I'm going to do a top-down analysis all the way from the monthly chart all the way down to the 15-minute chart. So I hope you enjoy, and I hope you take some ideas and apply them into your own trading. So right now I'm going to start off with the monthly chart. As I said, start off with identifying key levels of structure and possible entries and exit or trade ideas. My main focus this week is on the Japanese yen pairs. So all the currencies that are paired up with the Japanese yen, such as USD JPY, CAD JPY, CHF JPY, SGD JPY. So watch list for this week is interesting. So here on the monthly chart, I haven't identified anything big, just this sort of short-term descending wedge or falling wedge. Not big, may not be significant, as it's not the whole. Well, from this exchange, it's the whole range of data, but it's only over a decade worth of data, and it's quite hard to explain this, but in my eyes this isn't as sufficient. This looks more like a head and shoulders pattern, so I'll draw this out using this brush tool. This would be the left shoulder, this would be the head, and this would be that would be the right shoulder, which would imply bearishness in the market, and also this shorter term head and shoulders, which I'll outline with you on the weekly. So right now I'll move down to the weekly with you guys. So this is the head and shoulders I was referring to on the monthly chart, but on the weekly it looks much clearer and better for you guys to see. So this would be the left shoulder, this would be the head and the double top, and this would be the right shoulder. We are getting hints of bearish possibilities on higher time frames such as the monthly and the weekly so far, but lower time frames say a different thing, and we'll get onto that right now. Just a moment before we go onto lower time frames, we might have found some key structure, this key resistance level. Can we clone it and find a descending channel? Most likely, and yes we can. I'll just adjust this to fit. So you can see price here, possible flag pattern, and if price does decide to break to the upside, this would provide possibilities of great bullish momentum in the upcoming weeks and months and years rather, to these past highs from 2015, 2016. So those sort of levels. Those levels align with 100 plus, and right now price is trading at 77, so it will be we just work this out. It will be a 2,300 pip move. These sort of moves take a while in the market to play out, so we don't expect this in a week or something. We expect this in over a year, maybe a year and a half. Like here we saw 2,400 pip move in 560 days. So this move, which I'm forecasting for, would take a while to play out, and this isn't a day trade, this is a swing trade idea. So now we've drawn out structure, we'll move down to the daily chart, but there's one key level I wanted to point out here. I used the rectangle tool. So we've got this sort of past supportive level, and price has broken and possibly retesting it or possibly bouncing back from this descending channel bottom to head back to the highs of the channel. Now, if this level does serve as resistance, we could target these lows down here at 68.6. I'll just now use my line chart. Like so. If price decided to work with this level as resistance, then we could see levels down low here get hit. And from here we could see a bullish CADJPY, so a bullish Canadian dollar. And one thing you might notice is this zone coincides with the bottom of the descending channel. So that'll be interesting if we do see price head back down to this channel. And overall, I'm still targeting these highs. So now we're finally ready to head down to the daily chart and identify structure. As you can see here, before the COVID-19 crash, which impacted currencies such as the Australian dollar, the New Zealand dollar, and the Great British pound more than any other currencies. This is because they are risk-on currencies, and safe havens are more valuable at times of uncertainty and stress in the market, such as the Japanese yen, the Swiss franc, and XEU USD, or gold. So we had sort of this wedge pattern which was working as a corrective structure. Price did break, head down to this low, this key level here, which I'll outline for you right now. Price headed to this key level, came back to retest it and also retest the channel top of the weekly and monthly resistance levels before we saw a drop of a 1,000+ pips in under a month. Now, this is the sort of move we are expecting to play out in the next couple of years on this pair, but this seemed to happen in 19 days. But this is extreme volatility in the market, and this is not normal in normal market conditions. Now, this is probably something I should go over with you on the daily chart, on the 4-hour chart rather, and I'll do that right now. So we're getting bullish features here on the 4-hour chart, such as this inverse head and shoulders pattern, which, if you don't know what a head and shoulders pattern is, it's a key technical analysis reversal structure. We get it in the market when a big reversal is about to happen, and yeah, it's good to know when to identify one. So what we did see is price break the neckline very well here and retest it, which also coincided with this longer term monthly level, or weekly rather. Now price broke and retested the neckline of this lower time frame structure, such as the 4-hour chart. In perspective to the weekly, the head and shoulders pattern isn't as significant as levels like this, which we could see here as a big recent level of support. Now we don't know for certain, of course, whether we will see a break or a bounce from this level, but we can create a bias, and so we can create a bias of what we think is most likely to happen. So what I think is most likely to happen is that this level actually will be irrelevant to serving as resistance, and I think we'll head back up to the channel top, which would coincide with this daily structure here. Now, do we have a Fibonacci level for it? We'll look to see if we do. Yep, the 1.618 Fibonacci level coincides with this level of support from pre-COVID-19, the pre-COVID-19 crash, and that's just very good to see as a confirmation. Now we'll head down to the 1 hour time frame. We can see price is in quite a healthy uptrend here. You can see price returning to the trend line before it goes back bullish. We did send analysis out on this, and we posted one similar to this. We posted one on CADJPY, and very similar to this. And you can see now we are in the zone. We are heading back up, and we could see the market. We could see this currency sell off as a reaction to this serious level of former support. So how I'd be looking to trade this is I would wait for the false breakout. So sort of a false break to the upside to come to this level. And I would look for selling opportunities back to any of these key levels. You know, first take profit here, second one, third one, and fourth one at this structure, which is also the neckline of this 4 hour inverse head and shoulders pattern. We could have something like a 50 pip stop loss, you know, stop loss at 78.95. Just edit this in. And have first target here, which would be 1 to 5%. Second one at the end of the zone, which would be almost 2%. And you could hold this for 2.5, 3, and 4%. Of course, this is not a signal, and you should trade at your own risk, but this is a position which I would be quite interested in taking. And I'll forecast with you guys what I would like to see when we're up there. So I'd like to see something very similar to this. False break to the upside, correction, and a deep sell-off. And yeah, this actually does look quite appealing as a trade idea. So we should just keep this in mind and keep watching this currency pair. Last but not least, we'll head down to the 15-minute time frame. Delete this trade. You can see we have a lot of noise from the daily and hourly charts. That's fine. You can see here price possibly making a double top before selling back down to this level. And then we can start to see another sort of a deeper sort of a correction before the move back up like this. Did I just delete that zone? No, I didn't. It's just not showing up. Head back down to the 15-minute time frame, my bad. So if we see something like this, price doesn't come back to the trend line just yet. We get a correction like so. Look to trade the breakout. And then, if I can find it, the position, long position, look to get a 4 hour candle closure or hourly stop loss below the recent You could even have this one from here, 20 pip stop, risk reward 1 to 3, so a nice 3% if you were to do a trade like this. Now we'll head back down to the weekly time frame. We'll delete all of this low time frame noise. So what you might want to know is, am I bullish? I sort of answered this question previously, but I am bullish till further notice. If we get something like a bearish engulfing week, then I'll change my bias. But overall, I do favour the idea of getting a move back up to the channel top. And yeah, that sort of sums up the video, and I hope you have taken any trade ideas from this top-down analysis on CADJPY, all the way from the monthly time frame right down to the 15-minute time frame. And before we end the video, if you're new to this channel or you haven't already, please like and subscribe for more content. We push out daily videos. Actually, on Sunday I did 2 videos, which is why I skipped Monday's video and do this top-down analysis video for today. If you don't know what the video I did on Monday was, it was on natural gas and wheat USD, so sort of something different from Forex. So you can check them out if you want to. So also I advise you to turn the bell notification on to be notified whenever I post, so you don't miss any important updates. Thanks traders for watching, and I hope to see you back for another video. Take care.